the best.
Hey, good luck.
Thank you. Thank you. Good. Yeah.
Welcome to the PPP Forgiveness and Impact of COVID-19 on Immigration webinar. We are so excited that you could join us today. The webinar will be starting at 6:30 p.m. Welcome to the webinar on PPP forgiveness and impact of COVID-19 on immigration. Thank you so much for joining. Our webinar will begin at 6:30 p.m. Thank you. Thank you so much for joining our webinar on PPP forgiveness and impact of COVID-19 on immigration. We are so excited to have you here, and we'll begin shortly at 6:30 p.m.
Hello, everyone. Welcome to the PPP Forgiveness webinar. On behalf of ICC and ICC Tri-Valley, we all are happy to have you here. and to bring you one of these current topics, which is PPP, forgiveness, and also what's the impact of COVID-19 on immigration. I am one of the founding board members for ICC Tri-Valley. I have been a Pleasanton resident for the last 20 years, and I have a tech industry background. I started an e-commerce company a while back, and then last couple of years, my main focus has been on devoting my time to a couple of nonprofits. And a few months ago, when ICC decided to have a Tri-Valley chapter, I was fortunate to join their board and take this forward. So it is great to see everyone here, and we have a wonderful panel and panelists here to take you through our webinar today. With that, I would like to introduce Vanita, who has been our super active and amazing board member and volunteer. So Vanita, on to you.
Thank you, Sanjay. Good evening, everyone. Thanks for joining today in this information sharing session. I'm Vanita Agarwal, and I'm one of the advisory board members for ICC Tri-Valley. We are super excited to actually bring ICC Tri-Valley into our neighborhood. It's going to be really very meaningful to our community. We have a wonderful set of panelists today here, and our awesome moderator, Sharmila Patel, will be introducing them shortly. Sharmila is the CFO at Health IQ. And I just wanted to let everybody know that this session is going to be a guideline on this topic of PPP loan forgiveness and impact of COVID-19 on the immigration. However, we recommend you all to please consult your advisors before taking any action. And this session is going to be recorded and will be posted on our Facebook page. We'll try our very best to answer your questions, but if we are not able to reach through your questions in this session, because I'm sure there will be tons of them, you can also email them at info.trivalley@indiacc.org. You can also type your question and the Q&A chat and the chat box. We'll be monitoring those too actively. With that, I would like to introduce Sharmila Patel, our awesome moderator.
Thank you, Vanita. Hi, everybody. As Vanita said, I'm Sharmila Patel. I've been in the finance field for many, many years and currently the CFO of Health IQ. I have the pleasure of moderating this panel of very well-adversed specialty folks here in the accounting and legal space. So with that, I'd love to introduce you to Jared Thies. Jared is from KPMG, and Jared, would you like to give some of your background?
Sure. Thank you very much. And thanks for everyone for having me on today. I really appreciate the opportunity to speak with you. My name is Jared Thies. I'm a director in the accounting advisory practice with KPMG. I'm based in our Seattle office. I mostly serve public and private companies that are providing accounting advice and other types of reporting advice. But since the CARES Act was issued, I also have been leading the firm's efforts from a borrower perspective when it comes to the Paycheck Protection Program. So happy to talk with you guys today and look forward to your questions.
Thanks, Jared. Our next panelist is Bhakti Pujara. Bhakti is from Chugh CPA LLP. Bhakti, could you give your introduction, please?
Sure. Thank you, Sharmila, and welcome, everyone. I'm a partner CPA with Chugh CPAs LLP. I work out of the Santa Clara location and have been associated with the firm since over 10 years now. I am a licensed CPA from the state of California and a qualified chartered accountant from India. I have a varied experience across a broad range of industries, which includes IT, healthcare, manufacturing, service, industries, entertainment, and hospitality. I lead the audit and assurance team at Santa Clara office and handle a wide variety of financial audits along with consolidations, reviews, 401k audits, due diligence, 409 evaluations, and I also handle corporate and individual taxes. Thank you, Sharmila.
Thank you, Bhakti. Our next panelist is Sanjay Gupta. Sanjay Gupta is from Sanjay Gupta CPA. Sanjay, could you please give your background?
Thank you, Sharmila, and thank you all of you for attending this webinar. We have definitely very well-known panelists on this one. I've been doing this for several years. I've been CPA for the last 15 years. I chartered accountant in India, practiced in India for 10 years. So I've expanded in different horizons. My offices are, I have four offices in the Bay Area. Well-known, I've done radio, I've done TV shows on this various topics on taxes and accounting. My office is purely based on tax support, tax work, different clients. It's more concentrated on small business. So we are very happy to serve all of them. A very good team in my office, about 25 people, well-experienced CPAs and EAs, and very motivated. Yes, so I'm looking forward for this webinar. Thank you all for joining this.
Thank you, Sanjeev. Our first three panelists were really from the accounting sector, whereas our last panelist, Kirti Gaira, is actually from the legal area. Kirti is also from Shug and a CPA LLP.
Actually, Sharmila is just Shug LLP, but they're two sister firms. We share offices and coincide with our sister firm, Shug CPA LLP. But yes, so I work out of the Northern California office. I've been with Shug firm since 2008. My primary practice is in employment-based immigration. I've served small to medium-sized businesses and primarily in the tech field. I'm happy to be here and I'm looking forward to your questions.
Thank you so much. Okay, so today we're going to really start off by the PPP forgiveness and expense eligibility and some of the accounting implications. I'm going to start off with a question really for Bhakti on some of the deadlines for forgiveness and can I apply for forgiveness before the end of the covered period?
Sure, Sharmila. That's a very good question. In fact, we get this question every other day from our clients. The rule says that we can apply for forgiveness within 10 months from the end of the covered period. But the businesses do not have to really wait till the end of the covered period. If the loan proceeds have been correctly utilized, they can apply for forgiveness even before the end of the covered period. Actually, many banks have already started taking the applications. So if your business has already utilized the funds correctly, yes, you can go and apply for forgiveness. One thing I want to point Sharmila out here is make sure that while applying for forgiveness, you have your documentations ready and correct because the entire thing of forgiveness is going to be based on proof of payments, your payroll records, please maintain them, your mortgage and utility bills, please maintain them. Make sure that you make the maximum benefit out of your PPP funds. Sharmila, one more thing I want to point here is one reason why I should be waiting till the end of the covered period. Let's say, for example, if a business has a reduction in their full-time employee count or has a reduction in their salary, they will benefit the most if they wait till the end of the covered period. So this is because the reduction applies to all the qualified expenses that has been incurred during the covered period, even though it is in excess of the loan amount. I'll give you a small example. Say if the borrower has received 100K of proceeds in the PPP loan funding, and because of the salary reduction, the forgiveness amount is reduced by say 10%. The reduction is going to be applying to the total eligible expenses and not the 100,000 loan that would be the possible forgiveness amount. So if you wait till the end of the covered period and the total eligible expenses is 200,000, then the reduction is going to be 10% of that, which is going to be 180,000 of eligible expenses, which means the entire 100,000 loan will still be forgiven. So make sure you take the correct decision, understanding the facts about your case and apply for forgiveness. Back to you, Sharmila.
That's great. Thank you, Bhakti. So Sanjeev, can you tell me a little bit about 8 weeks versus 24 weeks? You know, which one should we choose for the period of forgiveness?
It's a very important question. A lot of people, again, like Bhakti has rightly said, a lot of people do ask question about when to apply. This is also a question that always people ask is about 8 weeks or versus 24 weeks, what we should take. Well, it all depends upon the number of employees. How many number of employees you have, you can maintain the headcount. And also, it is based upon the employee salaries, how much the salary reduction you can do beyond 25%. Of course, we are looking for reduction in salaries for those people, for those employees making less than 100,000, making more than 100,000, we don't care. So if you're having a good number of employees and you're maintaining those headcounts, and you're able to use the money the way they want for qualifying expenses and qualifying period, it makes sense to take the 8-week period. Why should you take for longer 24-week period? So that's two factors: the maintaining employee count and maintaining the employee's salary beyond, not reducing the salary beyond 25%. If you can manage that and you can use that fund in the way you want to use it, yes, the way the program wants, then choose 8 weeks. If not, like 24 weeks, people are not able to maintain the employees. For one reason or the other, employees not coming to their work, but they want more extra time to hire new people because they get time by December 31st. So so they can then definitely look at 24-week period. But that's important. That's case by case basis. But I will suggest a lot of people do go with 24-week rather than 8-week period.
Hey, that's really good to know. So what can you tell us about the safe harbor requirements for the reduction in headcount?
Yes, that's another important regulation when it comes about safe harbor requirements. Of course, we have a safe harbor requirement for business owners, but we also have a safe harbor requirement for reduction in employees. So if the employee, if you're laying off employees between the period from February 15 to April 26, and you're able to hire them back by December 31st, then you don't have to get any reduction in that employee headcount. Now, that's one safe harbor. Second one is the employees resigning by themselves and they're going for and finding jobs somewhere else. And so that's a one quitting that termination is there. Third reason can be for non-performance. If they're not able to perform, and you have documentation to prove that they were not performing as per what they require to perform and their job performance below the skill, then definitely you don't have to do the reduction of employee count. Fourth reason can be if you already laid off the employees and you're giving them offer to come back, but they're not coming for one reason or the other. Their child is at home, or they have to take care of some parents or something else, and you document those things that they are not coming back to job, and you inform the ADD. Of course, the information, something the SB has not come back with what document, what supporting roles, what things needs to be done. But what they say is if you inform the ADD, you don't have to do the reduction headcount. And last but not the least, if you don't find new people, similarly qualified people for fulfilling the job requirement, for fulfilling the same positions by December 31st, and you document that one by advertisement, by taking interviews of the employees, then you don't, definitely there's no PPP loan forgiveness reduction on account of employee headcount.
Great, that's great. So, Bhakti, how would I consider the FTE count for salaried employees who've actually worked for part of the covered period? I think Sanjeev kind of hit up on that, but in terms of more details on that, can you tell me?
Sure, Sharmila. Again, a good question. So FTE means the full-time employees. The Treasury has defined the FTE as the person who's working for 40 or more hours. And they quote number one or amount one as a person who's working for 40 hours. So for example, if you have an employee who is working for less than 40 hours, say 20 hours, the count for that will be 0.5. Unfortunately, if you have a person who's working 60 hours, it's not going to be 1.5, but it's going to be capped at 1. So there are two ways that they calculate the FTE number. The first way is that the number of hours that an employee has worked during the week divided by 40 and then round it up to the nearest 100, which is, say if the employee has worked 30 hours, divide 30 by 40 and it's 0.75, you round it up to the 0.88. So that's 0.80 count of your FTE. Or the simple way to define it is if count 1 for each employee who's worked 40 hours or more during the week, and 0.5 for anyone who's worked less than 40 hours. So part-time employees, less than 40 hours is going to be 0.5. That's how the FTE calculation can be taken, Sharmila.
Okay, that's really good to know. Now, in terms of what if my loan is not forgiven or is partially given, what happens then?
Hope not, Sharmila. I want to make sure, you should, all the businesses have applied for such a big stimulus package that the Treasury has offered. I hope everyone's loan gets forgiven. But yes, there can be a possibility that the loan will not be forgiven. And one of the very popular industries that is hardly hit, which is hospitality, it's very hardly hit, and there had to be layoffs and let the employees go because there was no business or low business. In such scenarios, the unforgiven amount will be treated as a loan, which is going to be taxed, or which is going to be with the interest at 1% for a term of 2 years or 5 years, depending when the loan was granted. So let me say, if the unforgiven amount is low interest financing then, if it's not forgiven. Thanks, Sharmila.
Thank you so much. Now, this is just generally to the panel. One of the questions that we're actually getting through is my PPP loan taxable?
Sharmila, I can say that the PPP loan is not taxable. It's not going to be taxed. That's what the SBA regulations have said. But the IRS said that the amount of the expenses that has been paid for the payroll using the PPP funds is not going to be deductible. So indirectly, it's going to be income and taxed. So SBA says no tax, but IRS brings it back. It is taxable indirectly.
Okay.
Well, the intent of the Congress has been to allow for expenses. So I think after the elections, we will get to know that you can double dip the expenses. It's going to be there.
Hopefully, yes. Let's pray.
It's going to be there.
Hopefully,
No way.
Yes.
You don't want people paying taxes on that income.
Exactly.
And then it's no use. No use. Absolutely no use.
And I would like to add too that this continues to be a question. I think, as they're mentioning, legislation could change in this arena. But one thing that's very interesting that we're starting to hear from some of our clients is it's only not deductible, the expenses, if you pursue loan forgiveness. But if you don't pursue loan forgiveness, that actually those expenses are deductible.
Yes.
And so one of the things, there could be a timing issue between 2020 and 2021 with the deductibility, because if you're uncertain if the SBA will forgive you, you may take the deduction in 2020 and then actually have a reversal or an amendment to file in 2021 when you receive that forgiveness based on the timing of forgiveness. So definitely something to consult your advisors on, I think, and the folks on this panel are certainly going to help.
That's great. Now, another question that we have is, will the SBA audit my PPP forgiveness application?
Well, it's as per the SBA guidelines, is any loans more than $2 million is of course subject to audit. Of course, that's a no-brainer. Less than $2 million, they can do verify the deductions and the documentation. It's not that hard. First of all, they will not audit. They can do a random selection. They have a time up to 2 years from time of forgiveness. So they will not be audited, hopefully. But of course, they have to keep the documentation. But audit is only in case of loan more than $2 million. As of now, it can change later on. Elections can make things change.
And this is a subject that's kind of developing as we go along and learn more.
Yes.
And Sharmila, I might add too. There's been some questions in chat on whether 150,000 is the automatic forgiveness, and there's bipartisan support for that in Congress right now to have that be the threshold. But nothing has been passed as far as legislation yet. So it's part of larger packages, I think, that they keep trying to pass, but nothing official at this point on that.
That's really good to know, because there were a lot of questions on the 150K limit. In terms of going on a little bit onto the cost side, actually, before we go to the cost side, what are some of the GAAP accounting considerations for PPP borrowers? Jared.
Sure. So for for-profit entities, GAAP doesn't technically have guidance related to government grant accounting. It exists in the not-for-profit standards. So if the companies had no pre-existing policies associated with government grant accounting, that includes any jurisdiction. So that could be a municipal grant you get, a county or state or something like that, even not just federal. If there's no existing policies, then what most major firms have kind of pointed to, and under GAAP, you're able to use other authoritative means, but you can use ASC 470 for a debt accounting model, because in substance, the PPP loan itself is debt. Under that model, you record it as debt, call it debit, cash, credit, your debt liability. And then once the loan is forgiven or extinguished, as normally is referred to in debt accounting, then you would have some form of gain related to the extinguishment within other income. Could be within the interest expense line item if it's not very material, or a separate line item for you. If you don't want to go the debt accounting model, you are able to use International Accounting Standards 20, which is a government grant accounting for for-profit entities, IAS 20, as we refer to it. Mm-hmm. Under that, there's really, you can basically look at it from the sense of two methods. Most people choose the income side of it. There's an asset and an income piece, but given these are deductions, expenses that you're incurring, that these proceeds are covering, you could record it as a government grant. Again, you could have a liability for that based on paying it back, but the recognition of the income statement's a little different. There's two ways to follow. You can either record it against the expenditures as an offset, or you can record it as another income. The triggers for that actually there's two steps to think about in IAS 20. You got to comply with the relevant conditions. So this instance, you got to meet the different pieces of forgiveness that they're asking for. And the second is the grant will be received. That is the trigger that a lot of folks have thought about when it comes to recognition, given there's uncertainty, there's no precedent, sometimes no historical practice for a program of this nature and whether they'll be forgiven. So that second question, you normally have to apply a lot of judgment if it will be received. If it is, again, you can record against the expenditures that you incurred, or in other income, it's an election for yourself.
Okay. Okay, that's great. Thank you. And again, as more information comes up on this, we'll kind of go through it. The other questions that I have is really around the cost side. What are the costs paid using PPP loans that are eligible for forgiveness? Because that's a big question as you go through the details.
That's a very vast topic to cover. What are the eligible costs? But let me discuss some important points about what eligible costs are. As the name says, payroll protection, the main important cost that is eligible is the payroll cost. So what's included in the payroll cost is a salary, wages, commission, your vacation pay. It also includes the group insurance premiums. It also includes retirement payments, the state and local taxes that has been paid on behalf of these compensation to employees. It also includes certain non-payroll costs like your utility bills, your electricity, telephone, internet, your rent payments. So one important thing about these non-payroll costs is that they should have been based on the lease agreement that was in place before February 15th of 2020. So these are the kind of payroll cost and the non-payroll costs that are eligible for a forgiveness amount. The only thing is that 60% of the eligible expenses should be used towards the payroll cost, and the balance 40 can be used towards the non-payroll cost. We have to note here that the eligible costs that are incurred actually before the covered period, but paid after the covered period, will be eligible for forgiveness. So, and also the payroll costs that have been incurred during the covered period, but paid after the covered period, that will also be eligible for forgiveness. One example of the second one is, for example, the payroll covered period ends on October 2nd, and your payroll period ends on September 28th. So the payroll cost has been incurred, but this is going to be paid only on October 6th. This amount, though it's going to be paid after the covered period, it will be allowed as an eligible amount for forgiveness. It just has to be paid immediately in your next payroll cycle. So this is the cost that I want to talk about that can be eligible for forgiveness. Sharmila.
Thank you, Bhakti.
Sharmila, I want to add a little bit on that one too. Just quick reminder for a lot of people who are small business owners, like who are suffering really, like restaurants and hotels industry and the travel industry. So what is happening in that case is they don't have employees, of course, they have no employees. So they are paying the rent and mortgage from those money. So SB has clearly mentioned that if it exceeds 40%, there's no forgiveness. So that's very important. So it cannot exceed 40%. Minimum is for 60%. The payroll can be 60%, can be 50%, can be it's 40% partial forgiveness is there. But in case there's no payroll, and the rent exceeds 40% or mortgage payment, then there's no forgiveness. So we have to be really careful on that account.
Okay, that's good to know. So Sanjeev, going down a little bit further into more detailed on individuals. So when you go in and you say, can one claim home office expenses while applying for forgiveness?
Yes, so definitely there's a lot of questions do come up. I am working from home nowadays. Can I claim my home office rent and mortgage payment, the area space? Can I claim those things? So the SB has come out with clarification on that one. You can claim those home office expenses provided it's noted on your 2019 tax return. So when you do S corporation or when you do C corporation or when you are Schedule C and you're claiming the home office expenses, definitely you can claim as part of PP loan forgiveness, provided you claim on 2019. If you're not, then you're out of luck.
Okay. What about when it comes to restrictions on owner expenses, compensation in particular?
Yes, so again, SPA has come back, they are specified into an owner more than 5%, owner less than 5%. Okay, so if you're owner more than 5%, then definitely the restriction applies. If you take 8-week period, it's $15,000, I think $385 maximum you can go based upon 2019 return, based on 2019 payroll. And then if you have 24 weeks, you can go up to maximum 20,833. You cannot go more than that. If you're owner more than 5%, if you're owner less than 5%, you're counted as a non-owner compensation. You can go up to 46,134 if you're having a 24 work period. So you can go into that. Plus, there's one more restriction on the employer contribution to medical expenses that is not allowed for the shareholders owning more than 5%. But in case of retirement contribution, like defined benefit plans and 401k, they did one exception to the S corporation shareholders. They can do that. They can take the pro rata basis, not the full amount. Of course, a lot of people want to deduct the full amount of DB plan. That is not allowed, only the pro rata basis according to that covered period or alternative covered period amounts. Then they can claim on their for loan forgiveness.
Okay. So one of the questions I have actually from the audience is, I received a PPP funding as well as a PUA, the state of California funding. Do I return one of them back?
Again, the federal and the state are both different. Okay, so if federal is giving the loan forgiveness, that's based on the federal requirements. If the state is giving the state forgiveness, is based upon the state requirement. Both are different, so you can get both. Definitely, county has also given in some areas. I've seen some clients getting the county benefit too. So yes.
That's good. So Bhakti, are there any other funding opportunities if someone doesn't qualify for PPP loans?
Yes, Sharmila, that's the best thing about the CARES Act. They've made sure that not only small businesses, even big businesses get some advantage at least. It's a difficult time. The pandemic has created a lot of chaos. So PPP, one of the popular programs. But apart from that, the different funding options that can be made available or have been extensively used are the payroll deferment, wherein the employer portion of the Social Security tax that has been incurred between March 27th of 2020 till the end of December 31st, 2020 will be allowed to be deferred and paid in 2 installments. Half is due by the end of 2021 and the next half is due by 2022. So that's one option. There is also Main Street lending, which is available for businesses. Mm-hmm. The only thing that we've been seeing for Main Street lending is the banks have started taking the applications, but we've been approached by clients who have been applied for the Main Street lending, and bank requires financial statements to be audited or reviewed. So please consult your bank and your advisors of the necessary steps to be taken. Mm-hmm. The other popular program is the EIDL loan, which is the Economic Injury Disaster Loan. Many businesses took advantages of this as well. This is more for the working capital needs and the operating expenses. So the businesses can use this funds. This is a loan essentially for a 30-year loan at 3.75% interest rate. So these are some of the popular funding options that is available. One last that comes to my mind, which many people are taking use of in case it's a startup and making profits, losses, you can carry back your NOLs for 2018 and 19. You can carry back them for 5 years, which was essentially removed out of in the TCJA Act They removed out the carryback of loans, but CARES Act brings it back right now. So they can take advantage of these facilities.
That's great to know. So Jared, how has the current environment impacted mergers and acquisitions related to activities for small businesses?
Yeah, good question. It's something that we have been seeing a lot of activity with over the past 4 to 6 weeks. A lot of the PE firms and venture capital firms really sat on some dry powder they had at the beginning of the year, and also at the beginning of the pandemic. And as things have kind of unfolded, they've now started to target some of these smaller businesses. And really what we're seeing is a couple scenarios where, you know, maybe small businesses were operating well and now are in distress with the pandemic. So they're looking for the source of capital or kind of a way out here. Otherwise, some of this has actually been businesses that are a little more mature, have owners that are maybe don't have a great succession plan or are ready to retire. And they've been looking at, again, another exit strategy here and it being favorable with the amount of dry powder out there. So the interesting things with it, though, is it is pretty heavy into the deal negotiations as to what the consideration is, because these are loan being taken on if they're not already going through the forgiveness process. So we're seeing contingent consideration or reduction in consideration given by some of these firms when they're looking to acquire some of these businesses. So there's definitely a lot of other issues. I mean, SBA case law has a few things around present effect when the deal is being negotiated. You know, was there a present effect? If there was an agreement signed, does that potentially give rise to control by the acquirer before the application was submitted, which could cause an ineligibility of PPP? A lot of different things that companies are working through and different contingencies being built into the agreements around forgiveness. If it's not forgiven, the acquirer generally doesn't want to be stuck with the liability. They want to put that back to the sellers. So just something to be aware of if folks are looking at that acquisition aspect. There's a lot of issues with it. So.
Wow, that's good to know. So I have another question, and it's actually surrounding proprietorship with a person who has themselves and their wives as owners of the business. What expenses can be deducted?
Yeah, again, it's the same thing, like qualifying expenses, like Bhakti said, like payroll 60%, qualify expense, other expenses like rent, utilities, mortgage payment, home office expenses. Of course, they can't deduct the contributions, as in a Schedule C. They can't deduct the contribution to medical or retirement plans, but those are the real expenses. Those are the expenses they can qualify. Now, it's based upon 2019 also tax returns, so you have to really look into 2019 and make sure that they are reasonable limits.
Okay. Thank you. That's a lot of accounting expenses and forgiveness questions there. So thank you. Now we're going to go to the legal side. So Kirti, can you kind of give us the highlights of some of the questions and frequently asked questions that you're hearing?
Yes, sure. So, you know, I primarily work with small startups and tech companies and medium-sized businesses. And in the Bay Area, a lot of them use people that are in the United States on employment-based visas, and it's very concerning when using employment-based visas to fill your staff, in a sense that there's a lot of questions around compliance, and because it impacts the employer and the employee. So some of the questions that we get are, you know, as some of the immigrant petitions contain questions regarding the usage of public benefits, will having a PPP loan forgiven have an impact on my current employees on employment-based visas or student visas for that matter? You know, the reference, well, what we normally tell employers is that the reference to public benefits in these petitions is normally referred to public benefits as supplemental income for individuals, such as public assistance. As these PPP loans were obtained and used by companies, it would not be applicable, and thus it would not impact the immigrant petitions, or as we call it, non-immigrant petitions, which are essentially temporary temporary employees in the U.S. on such an employment-based visa, such as H or L. And then, would it impact my ability to get these employees in the future? As of right now, the answer is no, but things are always rapidly changing. However, you know, the pandemic being a once-in-a-lifetime event, I don't see them adding a rule simply to add this as a public benefit. And even though the employer got the primary benefit, that they would use it to somehow discourage use of foreign employment. Let's see. Well, you know, now a lot of people, even after using up their PPP loan, are having to, you know, looking forward to the future, saying, look, I'm going to have to downsize my company. I'm going to have to take some people off of payroll. Will you know, will this impact my allowed to furlough employees still if I have people on H-1B and L and green card holders? Am I allowed to furlough them? Well, the answer to them is in two parts. Those that are on employment-based visas, you cannot furlough them because their entire purpose in the United States is for employment. So if you have no employment for them, they have to leave the country. However, you can treat the green card holders the same way you would treat citizens because they're not restricted to their presence in the United States based on employment. However, you know, the next question, the immediate question is, hey, say, look, I'm not going to furlough them, but can I cut the people that are on employment-based visas, their salaries a little bit? The answer is yes, you can cut their salary a little bit as long as it's across the board and for a certain percentage for a certain amount of time. However, it still cannot dip below a certain wage threshold. For example, in H-1Bs, the wage threshold is called the prevailing wage. As long as it doesn't dip below the prevailing wage and you've been paying higher, you can bring down their salaries temporarily as long as you do that with all the employees and not treat the employment-based visa employees differently. So, you know, okay, fine. We're not going to cut employees. We're not going to furlough. I'm sorry, we're not going to reduce salaries, but we're going to have to eventually cut off some employees. Will laying off some people have an impact on my current H-1B employees? You know, could I continue to file H-1Bs and green cards for foreign employees? The answer to that is in two parts. The current ones that are here, no, they're going to continue to be employed as they are, H and L and pending green cards, they're going to be fine. They're not impacted. But however, cutting staff now and laying off people will impact your ability to file future immigrant petitions for some of your employees. And that may indirectly impact your current employees because they would eventually need some immigrant sponsorship. And if they realize that, look, you're laying off people and, you know, I'm not going to have a future in this company because they can't file my immigrant petition in the future, then, you know, it may have an indirect impact. But however, just to summarize, it will not impact, if you lay off people, it will not impact your current employees on H and L and other employment-based visas, but it will impact your ability to file green cards for them in the future. I mean, those are some of the questions that we get around employment in the Bay Area. Mm-hmm. And I'll be happy to answer any other questions that show up in the chat box.
Okay. Well, we have one question, which I think is an interesting question. It's from a company that has a CEO that's an Indian citizen. And the question is, can they get a PPP?
Yeah, so the PPP loan is to the company. It's not to the individual. So it does not impact their ability to get a loan to secure it for their company.
Okay. So just kind of to ask some of the questions that I've heard and I've asked myself as I've been working through some of the PPP loans area. Some of the questions which are more tactical in nature, we've had questions on, you know, when I calculate the amount that the borrower is required to calculate payroll costs, can I use partial pay periods? I mean, you have 2 weeks of payroll. Can you use do you have to use partial pay periods, or can you use 2?
So when you say partial means 1 week going to bi-weekly, or what do you mean?
So in a month, it's kind of like you have 3 days versus 7 days.
No, you still have to run as per the pay schedule. Based upon a pay schedule you have to run. So they can definitely do that as long as the pay schedule is constant.
Okay. Okay. And then the other question I have here is, for the purposes of calculating cash compensation, should borrowers use the gross amount before deduction for taxes, employee benefits, and similar payments of net amount to pay to the employees?
The gross amount that they have to include, the gross amount of the salary.
Mm-hmm. Okay. I think that's a lot of the questions that I have. Just going out to the panel, I mean, what are the common, frequently asked questions have you seen and have you been approached by, everybody on the subject?
So one question that comes always to us is short-term application, short form application is easy application. The IFSB given two applications, short form and long form. So short form is definitely very, very simple. Okay. So it's meant for business owners who like, for example, Schedule C with no employees. If you don't have any employees, you go ahead and instead of doing long form, you can use the short form. Or if your business is not operating at full capacity level, you compare your pre-COVID levels. Pre-COVID is from January to March 15, and then compare your business during the covered period. It can be 8 weeks, it can be 24 weeks, and you're not able to operate because of health standards or shelter at home issued by the state or federal departments. Then definitely you can use that easy application. It's a very simple application. Or you're able to maintain the number of employees, and and the payroll is not reduced beyond 25%. Go ahead and do that easy application. It's very simple, like one-page form. But remember that automatic loan will come forward at $150,000. I've seen many banks. They already when they go into your application for loan forgiveness, they're already saying $150,000. Don't do it. So there's already a circular inside. This is insider information is already there. The banks are acting on it. They're saying the $150,000 will be automatically forgiven. That's why it's very important. Like Bhakti said, other side, it's very important to wait. Don't do it early. Just wait till the end of the covered period. You get 10 months of time. Why you want to hurry up? So don't be in the first in the queue. Be in the last in the queue for this forgiveness.
Okay. Well, one of the other questions.
Yeah, and I would maybe add too that one of the things I've been working with a lot of clients on too, when it comes to the FTE reduction, the forgiveness guidance tells you to calculate a full-time equivalency using the 10th, so 0.6, 0.7, 0.8, but does also provide a provision, kind of a shortcut that you can use one for a full-time or half for anyone that's part-time. I'd encourage everyone to run both calculations, especially if you know you're going to have some kind of reduction for FTE. I've seen instances where it's been favorable or unfavorable depending on which calculation you're using, even to the tune of a couple percent. But when you're dealing with a $1 million loan, a couple percent can be a decent chunk of money. So make sure you're running both calcs to maximize that forgiveness under the FTE reduction.
That's good to know. You guys may have covered this, but a question's come up on the tax deferral, the federal tax deferral, if you do not qualify for PPP. Bhakti, you were going through some of the other options that you have. Can you give a little bit more detail on that one?
So yes, as I mentioned earlier as well, the payroll taxes, the Social Security payroll taxes can be allowed to be deferred. So again, the Social Security tax, the employer portion only can be allowed. So employer portion is half of the employees. I mean, it's 7.65% total of social and Medicare, but only 6.2 is allowed to be deferred. So 6.2 for the employer portion can be deferred. The cost should have been incurred between March 27, 2020 to 31st December 2020, and it can be deferred half of it till December 31st, 2021, and the remaining half till December 31st, 2022. That's how the deferment of payroll taxes will work.
Oh, excellent. Another question just came up. It says they got their PPP loan, but decided they did not want it. How do they return it to the SBA, and any process or forms should they complete to get this done?
I think they can connect with the SBA directly, and I've seen people returning the loan, so they can connect with the SBA or the lender, which will give that loan, and they connect with them and they can give it back to them. There's always a process there.
Yeah, so Sharmila, the whole purpose why the PPP loan funding came up was to support the small businesses to meet their payroll cost. When the PPP loan first began, there were not many clarifications, and big businesses, even the cash-rich businesses, they took the loan funding, they took that benefit. But when the clarifications came out and they realized, they refunded back. And yes, as Sanjeev correctly said, just go back to your lender and they will take the funds back.
That's great. That's good information. So, okay, so we'd like to actually open up the questions to the.
Sharmila, if I could ask Kirti a question real quick while we're maybe opening it up.
Absolutely, go ahead.
On his section. So I told you I'd be paying attention, man. I wanted to ask you a question.
Sure, absolutely.
So you had mentioned that, you know, if you have to furlough employees, because I've actually had this question, I didn't even know who to refer to. So, but if you're going to furlough an employee that is here on a visa, you mentioned if they lose that, they have to return to home. Is there any kind of grace period or cure period or some way, or kind of what's the timeline for that return that they have?
Right. So there is a 60-day grace period. For example, somebody on H-1B, they have a 60-day grace period to find another job. So it could be with somebody else, not necessarily with the same employer, but they do have a 60-day grace period to find another job. And even if they have to leave the country for a short period, they don't have to go through the rigorous process of being subject to the H-1B cap, which I'm sure everyone's aware of. Like every year it opens up and you get hundreds of thousands of filings, and then you got to get selected in the lottery. You can be exempt from all of that if you've been in the United States on H-1B before, right? So, so a couple of things. Yeah, you can get another employer in 60 days and file a transfer, or just leave the country for a short period, get a new employer, and come right back.
Gotcha. Okay, thank you.
So I have one question for Kirti, if you can allow me.
Sure.
So we'll definitely get through all these employees coming on H1s and everything. So what happens if the person is on EAD and he is given submitted for renewal? Now in that period, covered period, what happens to that? Can you keep it going, or what's the regulation leading to renewal? Renewal has not yet come.
Can the person continue to be employed while the renewal is pending?
So that's my question. Can the person be employed during the covered period, or they have to be let that person go till the renewal comes in?
So there's a couple of things. Well, when you file an EAD renewal, there are certain categories which allow for an automatic extension with a timely filing. And then there's certain types of EAD renewal that do not allow for an automatic extension. You would simply have to take the person off of payroll and put them back in when the EAD comes in. Now, what those categories are depends on their individual immigrant situation. So what I would do, there's a list on USCIS website which says EAD with automatic extension, and it'll tell you exactly which categories fall under. There's like 7 or 8 with an automatic one. The other ones, you have to wait for the EAD to come in, and then you can put them back on payroll.
Thank you. Thank you. I appreciate it.
No problem.
Okay. That's great to know. Any more legal questions? Because I think that's been super useful.
Absolutely. Absolutely. Anytime.
And I think that some of the shades of gray that we kind of discover when we actually working through come through, and I'm sure I'm going to keep you on my list to ask questions for sure. So, okay. So I think you know, we'd like to bring in the attendees to the main screen. If you do not wish to be on video, please feel free to turn off your videos, but we'd love to have more questions to the group.
Sharmila, I think there was a question, and I think it must have gotten answered during the session, but the question is, how do you write off forgiving loan in your accounting system?
I believe that was covered. That was covered by Jared.
So I have one addition on that one. When it comes to the cash basis accounting, GAAP is different when it comes to cash basis accounting, and when it's a S corporation, definitely the basis gets impacted. So we have to be really careful when you do accounting for that loan forgiveness, as the basis when it affects the basis for the S corporation.
Jared, I had a question for you. I know you mentioned before this 150K automatic forgiveness is in the Senate or Congress. I'm actually part of a nonprofit where, you know, we are struggling to put together all the paperwork for the forgiveness. So how do we track that automatic forgiveness? Any more news on that? Like, where is it and who is pushing it? Anything more you can say to the group here?
Yeah, it's a good question. I mean, we've had the conversation quite a bit, and we have some folks that are working with the Treasury and you know, Congress every day. And what they're hearing is it does have bipartisan support. across the table, but it's trying to be built in by, the Democrats with their extensive funding bill and the Republicans with their, smaller funding bill. And so they don't want to issue one by themselves because they want to make sure that they're getting all of their, proposed funding out on the table with this as well. So that's really the holdup, is getting it approved across, with the larger package that they're doing. But the other issue that I would say that what they're seeing, the Inspector General has started to release some information on this, but out of the, I think they reviewed 60 applications or something like that, and I can't remember if it was 20 or 25% had some element of fraudulent activity associated with it, with about 80+% of the loans being below $150,000. They're concerned that there's a high level of fraudulent activity in that threshold as well. And so they want to make sure that they're putting in some provisions, even it won't just be a blanket forgiveness, but some provisions that show, that they can detect any kind of fraudulent activity or misappropriation of the application of funds within that. So slight hang up there too, but it's mostly lying with Congress and then trying to build in some parameters from a fraud perspective. So.
Thank you, Jared. Sanjeev, another question for you. I know you mentioned the auditing part from the PPP or whoever is giving the loan, that above 150K, the auditing is pretty much, expected.
2 million, Sanjay.
2 million.
2 million.
Now the question is, even for smaller loans like 50K, 60K, 10K loan, isn't it we should be ready that the IRS can come and audit those books?
Oh, definitely.
Right.
Definitely one. This is going to be a good year for IRS. They will have their hands full, not only for processing the paper returns, but also doing this kind of audit. Yes.
Yes.
But they need to have staff. That's the problem they're facing.
Yes. Thank you, Sanjay. Thank you.
Yeah, I should note too that the audit period actually is a 6-year period. So even though you may get forgiveness or something like that, your documentation should still be in place, because anytime within the next 6 years, they can come back and ask, for an audit. So
I was just adding that more so in case they allow the double dipping of expenses. Of course, IRS will have definitely they will look into it through a very thin scanner and see whether everybody qualifies for it.
Can you elaborate on that, Sanjeev? Double dipping.
Double dipping expenses, like your booking expenses, the payroll, the rent, and other expenses for claiming the forgiveness, and you're also claiming those expenses on the tax returns. So you're lowering your profit. So you're paying less taxes, and you're getting the tax-free income too. So that's why it's known as double dipping. So definitely the IRS will be vigilant in this area if they allow the double dipping, which I think is going to be there very soon.
Very good point. Yeah.
Okay. Any more questions for the panel?
So did we, I'm sure we did, what is the deadline to file the forgiveness?
So Vanita, it's within 10 months from the end of the covered period that you can apply for forgiveness.
Okay, thank you. And there's one more. How is the PPP loan to be considered when filing 2020 taxes?
So that's the reason which we said double dipping and all this forgiveness will be depends upon what the Congress will do ultimately. So the thing is, what we say to our client is, do the estimated taxes, thinking it's not forgiven, so that we don't pay penalties and interest on the tax owed, and then wait for the Congress to act something. If not coming soon, file for extension, and let's see what happens.
Thank you so much. Sharmila, go ahead.
Yeah, so, given this group and their expertise, what other things do you think will come up in regards to legislation changes? I mean, there's so many things that companies are highlighting, and, being a CFO, I'm constantly going through saying, okay, this wasn't the right time for me to apply. Maybe there's going to be something further along in the, is there any anticipation of other things that you anticipate coming through? Any legislation that's pending apart from the 150K forgiveness?
It's a $1 trillion question, right, Sharmila?
Yeah. So. It's like a COVID, waiting for a COVID vaccine. It's going to be released. Were they going to be the first one taking it? I don't know.
Yeah, I mean, I think there'll be a funding package of some sort, especially as we see. I think it may depend on how the election transpires over the next couple of months and the debates and what comes out of that. There likely will be something passed. I don't know. It's changed so much. I don't know what that'll exactly look like by the time we get there. So.
Okay.
Well, as all the attendees could see, we have turned everyone into panelists. So if you have any question, you could unmute yourself and ask the question directly to the panelists. So we do have few minutes left and we welcome any question from you.
I want to add one thing here about the EIDL loan. Okay, people have received EIDL loan for small business owners. They have received $10,000 also EIDL advance. So when you receive a $10,000 EIDL advance, that will be lowering your forgiveness, but first is counted in the total PPP loan forgiveness. So make sure that you understand. A lot of people don't understand this. So if you receive $10,000 EIDL advance and 100,000 PPP loan forgiveness, it's not going to be forgiveness for the 10,000. It's going to be 100,000. And when you receive a loan, like Bhakti said, when you receive a EIDL loan, it's payable at 30 years, 3.75%, comes to around $731 payable monthly. There is a deferment of interest and the principal 6 months later. So definitely, if one of those business owners who are suffering, EIDL advance, EIDL loan is still available. They can apply to the SBA website and they can get this money. It's very fixed rate of interest and it's very easy to qualify for.
Just to add to that, Sanjeev, if the EIDL loan, since it's working capital, it can be used for payroll also.
Yes.
In case
if
you're using it for the payroll, make sure that it's different from what you're using for the PPP forgiveness. Yes. Again, you cannot double dip here. So yes. That's how it is.
I guess there's a room for just one more question before we wrap up. And the question is like, is there another CARES package expected? If so, when is it expected?
I'm waiting for second PPP loan. A lot of my clients still waiting.
Exactly.
It's the COVID question.
Vanita, so to answer that, yes, everyone's waiting for PPP forgiveness. PPP, second round, third round, they've been waiting any other stimulus package. But many startups who's even attending right now, the other approach that they should also focus is on take this opportunity to restructure your projections, make sure you're taking correct decisions, monitor your receivables, monitor your payables. This is apart from your loan funding. You need to look at this entire pandemic as an opportunity to plan for the unforeseen and make correct actions. Big businesses have also been started during recessions, Uber, Airbnb. So it's not always that these fundings are going to come in, but if the businesses strategize correctly, they can be successful even in the downturns like this pandemic.
So one more point I want to add here, Bhakti has rightly pointed out about net operating losses. This year, people are going to lose money. A lot of people, of course, not in IT and other people, other areas, but small business owners like restaurant, hotels, and other things. So it's a good year to look back. They're providing this year to look back, and they can set up the losses against the profit. There's a form that we use, or they amend the returns. There's a time limit, October 31st, 2021, where they can do this amendment. So it's very important that if you're losing money, use that loss to make money. So use it and set up against prior years. You can go back 5 years. So that's a very important tax strategy which we should not forget.
Awesome. This has been such a rich conversation. Thank you, everybody. I would like to invite Gautam Sinha.
Yes, Vanita.
Hi. Yes. Thank you so much.
This has been very engaging, and I hope everyone can get their PPP loan forgiven within the ambit of the law, at least all the participants who attended this, and hope COVID-19's impact on immigration is much better understood, and people who participated can navigate it with a lot more clarity. My name is Gautam. I serve on the board of ICC and on the founding advisory board of ICC Tri-Valley. I've been a resident of Bay Area for the last 30 years. 16 years in San Ramon, currently a Tri-Valley resident. I work as the group CEO of Times Internet. It's about a 183-year-old company, part of Times Group, and run about 40 digital businesses for them. This session has been very engaging, and I wanted to personally thank our learned panelists and very engaging moderator, Jared, Sanjeev, Bhakti, Kirti, and Sharmila for asking the very engaging questions and keeping all of us engaged, for providing a very knowledgeable session and a very valuable session for everyone who attended. And since this session is recorded, I think this will be useful for people even beyond this. Also wanted to thank our ICC representatives, Raj Desai, Rupal Dandia, our ICC Tri-Valley members, founding members, Vanita, Sanjay, and everyone else who helped us pull this together. Thank you, all of you, for putting this webinar together and for giving us your valuable time. Thanks, all of you.
Thank you.
Thank you. I would also like
Thank
to
you.
Thanks for having us.
thank you for their time. Thank you.
Great. Thank you.
Okay, thanks to all the participants. And we will be putting up this recording on our Facebook page as well for future references as well.
Bye, everyone.
Bye.
Thank you.
Thank you.
Thank you.
Thank you, everyone.